So here's our beginning. We're ESG and your family business. I want to welcome everyone to the webinar, ESG and Family Business with BDO's ESG Strategy and Service Leader, Christopher Tower. I'm Ann Smart. I'm the director of the Loyola Family Business Center, which is part of the Loyola Leadership Hub at Quinlan School of Business. We're a membership community of multi-generational middle market family firms working together towards a common goal of sustainability and successful succession. A little hard for me to say this morning. If you could go to the next slide, please. So today's webinar is kicking off our second annual Family Business Heroes campaign, which I'm really delighted to announce. Thanks to the support of our loyal sponsors, BMO Harris, BDO, and Catton, we are able to bring this wonderful campaign again out that will spotlight exemplary family businesses in a particular space. Last year, our focus was on family business resiliency, and this year we're tackling ESG. We're going to profile 10 family businesses who are committed to and delivering expertly on their ESG strategies. Next slide. So I would be remiss if I didn't take an opportunity to share some good news at the Family Business Center. I just want to let people know that we have two really wonderful programs coming up. These are our in-depth experiential programs, our Family Business Stewardship that was designed to help develop responsible shareholders, and our Next Generation Leadership Institute, which was designed and has been running for now 30 years, helping to train the next generation leaders in their family businesses. Thank you. Dale, next slide. So just a quick overview, some housekeeping about this webinar. Please keep your microphones off. 2 years into the C word when I'm talking about COVID. We are all used to this, keeping our microphones off and absolutely being respectful of one another, including our speaker who has so much to share with us today. Please use the chat for questions. I'm going to be monitoring them and I will be holding those questions, and then Christopher's been kind enough to give us some time at the end for Q&A. This webinar is being recorded and it will sit on the Loyola Family Business Center website, which is listed here, and then I can also put that in the chat. And then just know that there's going to be some other materials that Christopher is making available to us and that we will be sending out to all registrants after the program today. So with that, I'd like to turn this now over, next slide please, to the remarkable and again exemplary Dale Jordan, who's been a wonderful partner working with us to bring this wonderful webinar about and to make it happen. Dale, welcome this morning, and I will leave it up to you to introduce our honored guest.
Oh, thank you so much. As Ann mentioned, my name is Dale Jordan. I'm a partner at BDO based here in Chicago. In addition to my roles and responsibilities, a traditional partner in a public accounting firm, I'm also our tax marketplace leader in Chicago. So what that means is I'm responsible for ensuring BDO is represented with the right organizations and associations here in the city, that we have the right client base, and maybe most importantly, to ensure that we're bringing the right talent and resources to our clients here in Chicago. With that in mind, I am thrilled that BDO is engaging in this first year of sponsorship with the Family Business Center. We are just thrilled, honestly, to be a part of this year's campaign. We met with a group of peer advisory group members this fall. Our group walked away just very impressed with the engagement of the group, the level of intelligence and the opportunistic nature that was discussed at the meeting, and talked to Ann after that to see just how we could be more involved. And Ann and her team have welcomed BDO to the Family Business Center with open arms. I owe her a great big thank you for providing guidance with respect to how we can get involved and add value to the membership. Frankly, her and her team have just been a pleasure to work with. So although I could go on, we are here to talk about ESG. So let's move to it. ESG has a long history, right? Over the last 2 to 3 years, it's certainly accelerated in its rate and pace and conversation. And here at BDO, we've kind of refocused our efforts and our thoughts around ESG over the last 2 to 3 years. And within that time frame, we've probably had to address some of the same questions this group has had. Is ESG here to last? What do our clients and customers expect from us with regards to ESG? What do our employees expect? And frankly, what opportunities will ESG present to us? And what do we need to do to be poised to seize those opportunities as they come forth? So within BDO, we're pretty fortunate. We have a number of service lines, tax, audit, and advisory. And with that comes a whole bunch of talent. And Christopher Tower is certainly one of the most talented folks that we have here at BDO. Christopher's been in public accounting for over 35 years. He's served family businesses throughout his career in multiple ways. He's had many roles in the firm. He's held the post of our national managing partner for audit quality. He sat on the board of directors. Currently, he's a member of our executive team. And most relevant to this conversation, Christopher is our ESG strategy and service line leader for the firm. What that means is Christopher defines BDO's ESG vision and strategy, not only for us internally, but also how do we serve our clients in the marketplace. And he and his team are really thought leaders in this space. So Christopher, I really do appreciate you taking time. I know you get a lot of invitations, a lot of opportunities to speak. So thank you for carving time out for this group. I'm just excited myself to hear what you have to share with us. So with that said, thank you, and I'll turn it over to you.
Thank you, Dale. I don't know how I'm going to live down that intro. So good morning, everyone. It is really a pleasure to be here with you today to discuss the importance of ESG and overall sustainability to business and to family businesses, as our topic is today. First, I would like to say thank you to the University of Loyola, the Family Business Center, for inviting us to present today. We are grateful for the opportunity, and my true hope is that when we get done today, that there is some kernel, something of value that you take away from this discussion. BDO's core purpose is helping people thrive every day. And we believe that to do this successfully, we are committed and must integrate ESG into our culture and daily operations. So my role as BDO's ESG strategy and service leader is to translate BDO's commitment to ESG into tangible actions, to some real meaningful progress for our stakeholders. And we're going to talk about stakeholders today. So if you think about a CPA firm, who are our stakeholders? Well, our stakeholders are you, our clients, and our employees, our professionals, the people that make BDO tick. Internally, we are deep into our own ESG journey, and externally, we have curated a suite of services to assist our clients with their ESG journeys. Now, level setting with respect to ESG and sustainability, at BDO, we believe that ESG is a business and climate imperative. And one of my goals today on this call is to convince you of that if you aren't already a believer. One that businesses and their leaders must embrace in order to survive, thrive, and retain their social license to operate. Now, that's a lot. And again, you might think that might be rubbish, but hopefully by the time we finish today, I think you will see that this is a freight train that's moving very quickly, and I wouldn't get in the way of it. I would get on it. Said differently, the future of business is sustainable business. Organizations that do it well, we believe will benefit from increased opportunities for value creation, risk mitigation, greater overall resilience, and a healthier planet is hopefully the wonderful byproduct of focusing on ESG. Over the past few years, demand for investors and a diverse set of stakeholders, these demands for corporate disclosures on ESG factors has been really growing quickly in the last 12 months, really quickly. As we discuss later in this presentation, this is occurring in the public company space, but it is also occurring in the private company and now nonprofit spaces. Releasing sustainability reports is already becoming a baseline best practice in response to stakeholder and societal pressure. For family-owned businesses, effective governance practices centered on diligent planning and clear communication are imperative for long-term success. A strong family governance approach is the glue that will enable you to build consensus and a value alignment when it comes to your ESG strategy. So now let's move on to the presentation. Please know that's the end of scripted remarks. So the rest of this presentation is unscripted. So give me a few allowances as we go through because it may be bumpy being unscripted, but you get the real me with unscripted, which I think I won't put you to sleep. If I scripted, you might be wake yourself up in about an hour. Also, Anne made notes on one of the slides about questions. Please put your questions in the chat. I'm going to move through this presentation fairly quickly, which will allow for some good Q&A at the end. And if there is something really meaty that you think would be good to discuss on a slide, please don't hesitate to stop me. I'm flexible enough. We can stop and have a discussion along the way. So without further ado, let's move into the next slide. Let's see here. Yes, ESG level setting. One more slide, Dale, please. So this first section is really talking about ESG level setting and sort of I wanted you to see, if you haven't seen this slide is in existence in the marketplace in all kinds of versions. So most of you on this call have probably seen it. If you haven't, well, welcome to it for the first time. ESG is in 3 buckets: environmental, social, and governance. And really what it is a set of standards with respect to a company's operations that allows stakeholders, a broad group of stakeholders, to evaluate the company's progress towards overall sustainability. The environmental bucket considers how the company performs as a steward of nature. The social criteria bucket examines how a company manages relationships with employees, suppliers, customers, and most importantly, the communities we live and operate in. The last bucket, governance criteria, deals with the company's leadership, executive pay, audits, internal controls and shareholder rights, and many, many more things. One comment that people always say about ESG is that it is both a mile wide and a mile deep. Now, you might say, well, some of these things on this slide aren't meaningful to my company. Well, that's true. They may not be. Or they may be, you just haven't thought about the concept in a more expansive way. And that's one of the things we're going to talk about. So water and waste management, you might say, well, we don't produce goods. That's contract manufactured somewhere else. So that doesn't relate to my company. But ESG looks at who you use to contract manufacture, your supply chain. And therefore, water and waste management is actually very real to your company because you contract with someone to manufacture for you. So these are concepts we'll talk about a little bit more. The concept of what applies to you and doesn't apply to you is the concept of materiality. And we're going to delve into that a little bit more also as we advance the slides. So let's move on, Dale. So this slide is an interesting slide. We've morphed it a few times in performing these different types of presentations for different audiences. What we're trying to do here is just give a sort of timeline snapshot of, the sustainability journey of corporations in the world. And probably the most familiar one to everyone is the far left. It doesn't sound very good, extractive and exploitive, but that's really sort of what businesses have been. This follows sort of the Milton Friedman approach. Businesses survive to generate profits for its shareholders and does not have an obligation to work on social good. things that affect the environment, things that are positive in nature, or consider its impacts on those unless it's against compliance with laws and regulations. So that's the first bucket. Those are companies 60 years ago, 70 years ago, 80 years ago. Then you get into this next pillar, and we call this sort of the compliance phase, where companies started waking up, regulators started to act, and companies realized they needed to be really in strong compliance with laws and regs. And we birthed the concept of the chief compliance officer. So in this sort of historical line, the chief compliance officer was the first foot in the water, per se, as we're on this sustainability journey. Then we moved to what we call the CSR movement. And that movement was, okay, we've got a lot of stakeholders, there's a lot of pressure on us, let's give. Let's give back to our communities, let's donate, let's give time to our communities, and let's be philanthropic. Let's show that we're good corporate citizens. That lasted for a moment and appeased stakeholders, but for the most part, there's a great disconnect between business purpose and the impact of those donations. And there was a real call for more meaningful change in corporate America. And that brings us to pillars 3 and 4, where we reside today. Pillar 3, ESG, which I just mentioned on the previous slide, really talks about, looking at your shop, defining material goals, focusing on going neutral carbon impact, focusing on brand purpose and impact. Assumes less is good, it's good enough, less bad. And then there's the overall sustainability concept, which is the broader envelope on which ESG resides, and that is one of net positive advocacy for moving into a net positive space. Sustainable business in an unsustainable world. These concepts are floating around out there with respect to sustainability. If you're idealistic, the 5th bucket on the right is what many sustainability gurus would love to see corporate America move to, which is an idealistic future where businesses leave the world in a better place than when they found it. So what's called a restorative business model, servant brands. And I'll leave this slide with one brand that you'll find, if you really look them up and you look at them carefully, you'll find that they are restorative. They are actually making the world greener than they are taking from extracting resources and producing goods, and that's Patagonia. So take a look at Patagonia. That's an example of a servant brand that is living this restorative model. All right, let's move on to our next slide. Let me take a sip of water here, hold on. All right, so this next slide talks a little bit about the iterative process and sort of the drivers for a sustainability journey in a landscape. So this is sort of the initial piece of talking about the drivers and the business practices around them. So, again, from the timeline, we move from a corporate social to an ESG. You have drivers of change, and those drivers on top are just a few of many. And then you have the actual response, the sustainable practice of a corporation below. And you see the arrows going around. Basically, this is an iterative process. As drivers of change push on companies, companies respond and make meaningful change. This is just a pictorial graph to sort of give you an idea a little bit of how this looks, but we're going to dive much deeper than this as we move on to the next slides. All right, give me 1 second here. I need to advance my version of these slides. All right, so looking at drivers, market drivers, and stakeholder drivers, there are a lot. All right, and we're going to spend probably 5 or 6 or 7 minutes, as long as we need to talk about this, because this is the place that will start to convince you that this is happening and it's meaningful. And hopefully by the time we finish with this slide, for those of you that do not believe this is real and this is a passing fad, you will now at least have a question mark. Maybe I was wrong. And hopefully most of you already have entered this conversation today with the view that this is real and it's moving fast. So one of the first loudest groups out there that there isn't today, you do not see a private equity firm making an announcement about their focus on in sustainable investing and their portfolio companies and what they're requiring of those portfolio companies is the private equity community and the investor community at large. Huge voice in this. One of the most obvious voices, think from BlackRock, who's made some very loud statements. I will tell you that there are a lot of others. So if you've only seen a few of them, there are hundreds of them. And those hundreds touch thousands of companies because 60% of private company America is private equity invested. So this touches private companies in a very meaningful way. And the private equity community believe that focusing on ESG has real value. They believe it will provide real change for companies focusing on risk, value creation, employee engagement, brand support, and all kinds of other things, that they think there's a real business imperative for this. This isn't just window dressing and marketing from their perspective. And therefore, if you have private equity investment or contemplating it, you will get the big ESG push from them. Another area, sustainable lending and green bonds. This has been getting a lot of press lately. Lenders are starting to devote a portion of their lending portfolio to green lending and sustainable lending. Giving teaser interest rates. If you hit certain goals, your interest rate will drop 1/4 or 0.5%. Putting basically covenants in for companies to focus in this area. Lenders are starting to focus on underwriting aspects for sustainability, actually making announcements that they are starting to move their portfolio and will start diverting away from businesses that aren't focused on being sustainable. And then there's the next three, which all kind of come together, which is the competitive demand. The people are voluntarily disclosing, and the supply chain pressures. So you get competitive demands from someone that's doing business in the same space, is disclosing, has made a meaningful journey, and you have not. And all of a sudden, a customer comes to you and says, but your competitor over here is doing the things that are aligned with what we think is meaningful. Aren't you going to start focusing on this? So this is a point that I really want to drive home. If you don't get caught by a private equity play, if you don't get caught by a competitor, if you don't have a loud stakeholder group pushing you, if your lender hasn't pushed you, your customers will. Because for every customer you have that takes an ESG journey, one of the key elements of an ESG journey is vetting your supply chain. And once a company focuses on its ESG strategy, it will begin the activities of telling the people it buys from, its supply chain, we can no longer do business with you unless you're aligned with us from sustainability. This is happening. If you haven't heard the knock at the door on this, you will. It's inevitable. Unless you're living under a rock, but I don't think anybody with the executives on this call, I don't think anyone's living under a rock. So moving to the right side of this sheet, private equity is pushing, tying executive comp to ESG performance, not the entire comp, just a portion of it. This is happening in public company space. I was just on a call with a private company where their private equity investor was pushing to have the ESG strategies be 30% of the executive bonus pool and tied to achievement of those goals and objectives. It's happening. Employee expectations of pressure, brand risk, reputational, your basic social license to operate. If your brand, what you do is at all visible to the public in a meaningful way, somewhere along the way, someone's going to put their rifle scope on you and say, where are you? We looked at your website. We do not see your focus on sustainability. We do not see how you are sourcing materials, how you are focusing on circular economy, how you're focusing on lowering your carbon footprint, we're curious. And your next step is a very important one when that happens. There's also expanding regulation in the US, not for private companies, but believe it or not, when we talk later in this presentation, there is huge pressure in regulation for private companies outside the US, which again puts competitive pressures on US companies when our foreign competitors are actually doing meaningful things in this space. Board activism, environmental and social activism, and ESG rating agencies. With respect to regulation, on another slide, I will talk a little bit about the new SEC rules that were proposed on Monday. So we'll do that on a different slide. But let's move on to our next slide here. All right. So what I've done here is just provide you just 6 simple examples of transformational, sustainable activity in the marketplace. These 6 would be 6 of 10, 20, 30, or 40 activities that happen every day. So that you might say, Christopher, you're blowing smoke. There aren't 6 transformational things happening in the marketplace every day with respect to ESG and sustainability. And I would tell you, sometimes there are 100. And that sounds like a tall order, but it's very true. There are innovations, reporting initiatives, governmental actions, corporate declarations, corporations announcing new activities, corporate acquisitions, investment activities, lending activities, you name it. There are so many things happening. To help you focus on this, if you're interested, there are 2 publications that I discussed with Anne. They're put out by ESG Today and put out by Summit Advisors. Now, these 2 publications do daily alerts, and then they do what's called a week in the review. All you need to do is read the week in review. The week in reviews have probably 100 activities, meaningful things like that I just described. If when Anne puts those out, if you subscribe to them, they're free. So you just click through and search on their website for subscription, and you start looking at those 2 news sources for a couple weeks. It will blow your mind as to how much activity is out there in the world and what's actually happening. Stuff that you may not have seen if you're a Wall Street Journal reader, stuff you may not have seen if you get your bank's normal economic updates, and stuff, really noteworthy things. Like Nestle, all of the packaging materials for Nestle's products will be 100% recycled by 2025. I mean, I could just go on and talk about all the various initiatives that companies have done, the investing initiatives, announcements by private equity communities, regulations, reporting initiatives. Just subscribe, look at it, and do it for a few weeks. It'll be actually addictive because you will be really surprised by the level of activity. All right. Moving on to the next slide, please. Just moving my notes here. So I think I have, yes, this is the slide we're on. Okay, so in the next slide, what we've tried to do is give you what most companies, private equity, lending community, supporters of ESG and sustainability believe to be the key drivers for change, meaning not the drivers in terms of the benefit drivers, not the expectation drivers, the previous slide that I was going through. And in the center is corporate values. So if you look at the periphery, the 8 boxes in the periphery, these are the many things that we believe that most companies would benefit from in adopting an ESG strategy, implementing and focusing on it in a meaningful way, they result in the center square, true corporate value creation, and also hopefully simultaneously benefiting our planet. And I won't go through and read these to you, but they're pretty straightforward. From brand image to reporting, to satisfying stakeholder demands, to attracting lending and investment, monitoring risk, a lot of really good stuff here that we believe are the meaningful benefits that come from implementing a sustainability ESG strategy. All right, let's now start talking about the journey. The journey, this slide gives you just a sort of high level. This is a consultant speak slide. On the left-hand side are some of the stages of your journey. I won't read them to you here because we're going to go into a little more depth on one of the next two slides. And the items on the right are the many types of activities that consultants, advisors can help you with as you go through your sustainability strategy. Looking down to the right, responsible tax. You kind of think, how is that a sustainable item? Well, tax transparency, paying your fair share, that has become a key focus of sustainability. So let's move on to the next slide because I think this slide and the next one will give you a little more information in terms of thinking about your journey. So as you embark on a journey, the types of things you do is you focus on awareness training, helping people understand what's going on. And that's real important because awareness training creates alignment. Without alignment, internal alignment between you and your executives, ESG will never happen, meaning the strategy will never be deployed. So you need cultural alignment around ESG. So education is the first step in that. The next step is really performing a materiality analysis and gap assessment. That piece of the phase is what tells you what is material, what is important to stakeholders. And as part of that, you do interviews. You interview your internal stakeholders. You interview your external stakeholders. And in a subsequent slide, we're going to talk about who those stakeholders are. Then you define oversight and responsibility within the organization. Nothing gets done without accountability. So you need oversight and responsibility, or your sustainable strategy becomes a pretty concept on a piece of paper that goes on the shelf. So there really needs to be meaningful oversight and meaningful responsibility. Then you look at your plans and goals in conjunction with these sustainable development goals and other standards out there. And you focus on developing and designing your policies and operational plans, setting what we would call a sustainable roadmap. And then you set goals in that sustainable roadmap. You develop an internal code of ethics around sustainability. You develop a code for suppliers to tell them how you are focused on sustainability. And ultimately, you focus on reporting. You focus on how to tell your story to your internal stakeholders and to your external stakeholders. Let's move on. So everything I just said is on this slide in a very meaningful summary. So determine stakeholders, what matters to them, materiality assessment, define your key risks and opportunities material to your business, take what they tell you matters to them, look at your operations and see if what they say matters to them actually aligns with what you do in your total value chain, from where you source all the way to who you sell to. Consider reporting landscape, regulatory environment, how you want to report, what standards you want to use, identify your metrics, measure, and then report. So that's, in a nutshell, that's the sustainable journey, strategy development. Moving to the next slide. Let me take a breath and a sip here. Excuse me. So this next slide really sets forth, who are your stakeholders? And there may be some that you really, before you got on this call, you really wouldn't have thought are stakeholders. Well, shareholders, well, your family-owned businesses. So you most likely, unless you've had private equity enter the equation, don't have a diverse set of stakeholders, unless you're a multi-generational family business and you have many children and grandchildren as shareholders and now key stakeholders. Excuse me for 1 second. Let me clear my throat here. So if you do, they're key stakeholders because they will have a view of what they want the company to disclose and focus on that may be very different from yours. And many of you may be already experiencing that. Employees, significant stakeholder group. And if you haven't polled or pulsed your employees, you may find out that they really have strong views that they've been sharing in the marketplace with other people that you're not aware of. So as part of the ESG journey, you poll them, you interact with them, you find out what their views are and where they believe things are material to the company with respect to sustainability. The other group that I talked about heavily, we won't do here, is customers, significant stakeholders. Never thought your customer would be a stakeholder to making sure you're focused on your own sustainable journey, but they will if they haven't already. Vendors, suppliers, lenders, ESG raters. They're focused on the public company space, but will be focused on meaningful private company space. Regulators in the US primarily focused on the public company space. Outside the US, on another slide, we'll talk about some meaningful regulation that's actually focused on private and public companies, which is quite amazing. And then, of course, the communities we live in. So next slide is where we're at. So again, when you do perform your journey and you are doing a materiality assessment, these are the types of questions you ask. What is the information you're looking for? The qualitative and quantitative information. How is it can be compiled? Are you going to put it on spreadsheets? Are you going to buy software to be able to accumulate it? What is the knowledge level within the organization? How much training do you need to do? How much do you need to bring people up to speed and sort of so they can help you? Do you need consultants to assist you in this process? And no, that wasn't a plug for BDO. What are you doing? What aren't you doing? What have you communicated today? What are you going to communicate? You have to start with the end in mind. Are you going to ultimately communicate externally and internally? That is a decision. But if you go down a sustainability strategy, I would think ultimately you will be reporting externally. Do you have policies and procedures? Do you have to develop them? Do you have to modify ones you have? What about your vendors? What about the supply chain that you source from? Remember, I talked about this knock-on effect. If you embark on a sustainability strategy, you are going to now do the knock on the door with your large vendors and say, hey, we can't do business with you unless you're focused on this, because their impact on your products, goods, and services defines you in terms of sustainability. Very, very, very important. On a footnote, let me just tell you, there are companies out there that make this their business. So there's this company called the EcoVadis, EcoVadis. It's established in Europe. It came into existence with the NFRD, which is a non-financial reporting directive, where 1,400 public companies in Europe currently report climate-related data. That's been in existence since 2015 or 16. It came into existence because as part of that work, those companies started focusing on their supply chain. Now that company has spread to the US. They have over 100,000 companies on their platform where they've gone through a full ESG assessment, 500 questions, submit them data, materials, analyses, policies. They rate you, and then they rate you every year. So you might say, well, why would I subscribe to that? Well, one of your clients will knock on the door in the not too distant future and say, we use EcoVadis. If you want to be a vendor for us, continue to be a vendor for us, please subscribe and have yourself rated. And it will be something you may consider doing with your vendors. So that's just an interesting thought for you. Moving on. So as part of materiality, first you have the sort of readiness for doing the assessment that we just talked about. And then you have the concepts of materiality. So ESG's got a new concept. So all of you, and especially those of you that have audits, you've heard from your auditor for years, hey, what's material? Material is something that would impact the financial statements that would make an investor have a different decision. It's meaningful to investment decisions, right? And in these definitions on this slide deck, in which Anne will make this slide deck available to you, gives you, some of the core definitions of materiality in the marketplace from standard setters and the SEC and actual the Supreme Court weighed in. But ESG is beyond financial statement materiality. It's incorporated in it, but it's beyond it. Let's move to the next slide. ESG has this concept of double materiality. So one of the reporting standards, and we'll talk about standards in a few minutes, is GRI. And GRI is the gold standard. So if you go out and look at people's sustainability reports, they incorporate GRI almost always as one of the standards they use. They often use more than one standard set, but we'll talk about that shortly. This concept of double materiality is not only financial materiality, but non-financial, environmental, social, and governance. Actually, should say governance too. But it's not only what's impactful to the company and the company's financial statements, but it's your impact on the market, environment, and people. So it looks at a lens of both what's meaningful to you and your impact on the world, on people, on your communities. So it's got a really different angle here that you sort of have to wrap your head around if you haven't explored this concept before. And you might say, well, why does this matter? I'm making decisions about our company and what's impactful to our company because your stakeholders care. And if you don't start focusing on the other aspect of materiality, the impact on the environment, the impact on people, your communities, you'll become not relevant. Your customers, your stakeholders, people stop buying your goods. It's going to be an area you have to focus on if you haven't done so already. Moving on, this is just another pictorial of this. So you've got this financial materiality as a subset of overall sustainable materiality. And if you see the standards there, GRI covers both. SASB, interestingly, which was a US developed sustainability reporting standard, really only focused on the actual financial materiality. GRI focuses on both sides. Let's move on. So Dale, one more slide, please. So looking at action for any business initiative that you have, I mean, as leaders in your family business, I'm sure you've implemented core strategic initiatives hundreds of times in your career in leading the charge in your successful enterprises. This is a chart that consultants use in terms of analyzing and focusing on the right things at the right time. We won't spend a lot of time on it, but it really does galvanize, the short-term versus long-term, the strategic, taking into consideration the effort, resources, costs, advisors, systems. All of these things roll into the thought process you need to embark on as you engage for a meaningful ESG strategy. So I encourage you, this is a good slide. It seems a little academic, but there's actually a few really good nuggets on this slide as you embark on a strategy to keep in your windshield as you're moving down that space. Let's move on to the next. So we've just done a lot of talking about activating your ESG program, sort of this materiality assessment, figuring out what's important, relating that to actually your operations and seeing if it's in alignment, looking at gaps, figuring out how you report. This slide of any takeaways really gives you, in a nutshell, the 10 areas of focus as you focus on an ESG strategy. First, starting with compelling vision, activating the strategy, making it visible from leadership, from your management teams as private businesses. There needs to be tone from the top. This can't be, hey, we're window dressing, we need to do this because our customers want it. It needs to be meaningful. If you window dress, you will alienate some stakeholder, potentially key employees, and you may never know who you alienated, but you'll alienate. Driving with policy, procedures, expectations, training, creating alignment, transparent communication. Here's the biggest issue with private businesses. When you embark on your sustainability journey, you may find things you really don't like. You may find that some of your suppliers are really dirty businesses. They may have forced labor issues. You may have a supplier in certain regions in China, for example. And so transparency and communication is essential. If you find out about those and you don't communicate, someone else will find out about it and communicate for you. So how you handle those tough moments is really, really important. What's most important is that you develop a strategy and you communicate the strategy for handling them. Accountability, as I mentioned on an earlier slide, nothing happens without accountability. So you need accountability. You need to incentivize people on the journey so that they do meaningful things. Key performance measures are really important. This program development, you see how the arrows go around. ESG is an iterative process. Something that wasn't meaningful and material to you next year, maybe. It depends on what's going on in the environment with your stakeholder groups, and then monitoring, auditing, and reporting. Let's move on. So this is another important slide that when you look at the slide deck, I would like you to take a moment and think about. There are a lot of areas that get impacted by an ESG strategy. I've just put a few up here to show you things that are, where change will occur within your organization if you develop, embrace, implement, tone at the top, culture change, and you hold people accountable for making these things happen. Learning, assessing your carbon footprint, mitigating it, doing offset strategies. How you give may change, and it may further align with your corporate purpose. Very important part of ESG and the GRI standards. Focusing on your supply chain, heavy work in the diversity, equity, inclusion area, and the items on the right speak for themselves. Moving on. So reporting. So this is the next stage of discussion. So when you've activated your strategy, you've gone down the path, you now know what's material, you've started aggregating data. What does reporting look like? Next slide. So just a quick reminder, let's level set. Again, when you're reporting, many of these things, when material to you, again, I would put the meaningful caveat, when material, and they may be material to you, though right now you might not think they are after you've done a true materiality assessment and you evaluated your operations. I just wanted to put this slide in one more time just to keep these concepts visual to you when you're thinking about materiality. Next slide. So reporting. So this is a historical graph of a pictorial graph, or however you want to call it, slide about reporting. So the historical report is your financial report, which you're all very familiar with. Then there was the environmental report that basically talked about a few key things, and it moved into the social responsibility report, which was more around the CSR movement and giving to communities. Now you have what's called the sustainability report. And that came from our European brethren. It was from the NFRD and also required by several of the communities in Europe, but regulators. I think the EU also required sustainability report for companies over a certain size. Right now in the US, sustainability reports exist for public companies and many private companies. Integrated report, that is the vision of the future. So we're going to talk about standard setting. Standard setters, regulators, and private standard setters are moving to what's called an integrated report. In the report, sort of like an MDA upfront, management discussion analysis, integrating a full discussion of your non-financial, i.e. your ESG factors, in an integrated report, so that an investor, a customer can look at you both financially and non-financially. Next slide. This just gives you the reporting process in a quick snapshot, defining the plan, setting methodology, engaging, collecting data, further elaborating the data, analyzing the data, developing the reporting narrative. To put out a sustainability report is quite an endeavor. It is not for the faint-hearted, because as you develop it, you'll realize the data you've been collecting might not be accurate. It might not be consistent. As you're developing, you will all of a sudden see there's certain things that you've identified you really don't want to report because they're not favorable, but you really should report. So you have to think about that very carefully. So this circle is a great pictorial of the path for reporting. Next slide. These are a few questions you might ask yourself. Am I ready to report? Do I have controls? Is the board, am I my board members, if you have a composite board, ready? Is the information consistent? Am I greenwashing? We'll talk about that a little bit later in this presentation. And is there consistency? And have I taken all the considerations into play with respect to my stakeholders? So these are just some of the many things you should consider with respect to reporting. Next slide. So these next 2 slides, I don't expect you to, if you're not familiar with these, to memorize these or to read all this in one fell swoop, but there are probably 30 or 40 reporting regimens out there. The most significant ones are on this page and the next page. SASB and EIR have merged together, now called the Value Reporting Foundation, and that is now merged into what's called the ISSB. GRI is now helping the EU with its CSRD, Reporting Directive. We'll talk about that in a minute. TCFD is the Climate Disclosure Regimen. The SEC just referred to this in its proposed rules on Monday. So the SEC has given a nod that TCFD is the probably best regimen for reporting your climate-related impact. So let's move on to the next slide. And then the underpinnings of all this from 10 or I can't remember how many years ago are the UN Sustainable Development Goals. There's 17 goals. Each goal has 5 to 15 core areas of focus. And when people report, they refer to the UN SDGs, and in a table they refer to GRI in most areas, and in a table they may refer to TCFD or SASB for certain components. It's like a little reporting grid. I'm going to report on this. Which reporting initiative am I focused on to provide you the information, stakeholders that you're looking for? Next slide. So one of the biggest moments that have happened in the sustainability space is the IFRS Foundation, which is the equivalent of our FASB in the US, has split itself. It has created now the ISSB, the International Sustainability Standards Board. This happened at COP26 in November. They have already drafted their first round of standards. They were working on the standards throughout all of 2021 before the entity even came into existence. Why is this important? Well, one of the things that has been driving people crazy is that It's alphabet soup, and there are all kinds of standards. You have to refer to 6 different standards when you report. ISSB will consolidate those standards to give one comprehensive, consolidated reporting set of standards. It'll be one of 2 major pillars out there in the future. Moving on. So this is a quick snapshot, and here's where I got to get up my other screen here. Here's where we're going to talk a little bit about the SEC initiative. But this tells you sort of what's going on in the world. There's subsequent slides are going to talk about this IFAC and CAQ study to tell you what's actually happening in the reporting space. But know that a lot of large public companies are already reporting, and we'll talk about that. Private companies have begun to report. We'll talk about that. We've talked a little bit about this evolution of reporting standards. On the left side, what I do want you to focus on is the CSRD, the 4th line from the bottom. This is the Corporate Sustainability Reporting Directive in the EU. It is moving fast, and it will require, when finally approved, and it will be approved, that companies that meet 2 criteria, 250 employees, 40 million euro in revenue, and 20 million euro in assets. It will require them to report starting in 25 for the larger ones, 26 for the smaller entities, a broad set of ESG factors, including climate, social, governance, a comprehensive reporting. It's one of the first initiatives ever that will require private companies to do so. It's expected to impact over 100,000 companies in the EU. And they're your competitors. So your competitors in 2 or 3 years will be reporting and providing the market and their customers with meaningful information. And guess what? The standard requires negative assurance on that data, actually auditors to get involved, and then 2 or 3 years later elevates it to full assurance. It's a really, really big deal. In the US side, for those of you who are actively looking at your Wall Street Journal, you probably saw this announcement from the SEC. So the SEC unveiled these proposed climate risk standards. The rules are particularly significant as the SEC is building on its 2010 guidance, but by providing what many believe welcome clarity as to the material nature of climate impact to investor decision-making. So this is a playbook that provides investors with critical information, around climate-related risks for public companies, and how those risks impact financial statements, business operations, and upstream and downstream value chains. So it requires work both in the financials disclosures and in the MD&A. And climate risks are broadly described in the proposal as physical risks, those being acute and chronic. So one moment events and chronic events, and transition risks relating to regulations, technology, market changes to mitigate or adapt to climate related risks. What's more interesting is this rule basically wants companies to talk about the impacts for the short term, near term, and long term. This is a perspective that is wholly new in SEC rulemaking. And it requires that the greenhouse gas, for the companies to disclose their scope 1 and 2 greenhouse gas emissions. And it requires for those to be attested to, limited assurance, and then subsequently full assurance. So it's a big deal. And one of my comments about that is your first thought might be, well, that's public company space, that doesn't matter to me. Well, at some point in time, you may have an exit strategy. And if you do, and it's going to be through private equity or through a public company exit, you need to start focusing on this now because it's a 2-year lift to get there. Secondly, from a competitive perspective, many of you may compete with a public company competitor that sells or delivers the same product or service with you. You will be at a competitive disadvantage because they'll be providing customers in the marketplace with meaningful information that those stakeholders think is really real. And they will start looking at you and saying, your public company brethren are doing this. Why aren't you? Next slide. So looking at disclosure in the US, public companies, we've talked about they're doing standalone sustainability reports. This SEC rule pushes it to integrated financial reporting. And private companies, we've already talked about. Some are doing sustainability reports, and some are doing statements on their websites and with codes of conduct or ethics. Moving to the next slide. Let's pass on this. We're running out of time, and let's pass on this. You can take a look at these two slides at another time when you get the slide deck. These next two slides, critical. 91% of the top 100 public companies around the world report some sustainable data, and a lot of it's attested to. This is a study that when you get this slide deck, that little graphic there on the right will allow you, QAR code will allow you to get access to the report. It's a very interesting report. You might want to glance at it. It tells you what's going on in the public environment around the world. Next slide. The CAQ, Center for Audit Quality, did a study of the top 500 companies in the US S&P 500. 95% of them report sustainability data. About a little over 50% actually have it attested to. Interestingly enough, the CPA firms are not doing that work. Consulting boutique firms are. That will change with this SEC rule. Moving on. This just talks briefly about the auditor's role, how we focus on ESG reporting and attestation. Several of the things would make total sense to you. We look for consistency, comparability of the reporting, making sure there's strong controls and governance over the reporting process. We make sure that your concepts of materiality from reporting perspective made sense, and that you're complying with the reporting rule framework that you're following. Next slide deck. This slide just are some do's and don'ts for you. Thinking about ESG reporting, thinking about making sure you keep it clean. The last thing you want to do is leave this conversation, talk to your manager and say, look, we are going to start doing this. Let's activate our ESG journey. And you task one person with doing it. They go off into a dark room. They come out with an answer without going through the real process, and they put stuff on your website. That is called greenwashing. So you do not want to be accused of that. So if you are going to embark on it, it's got to be done with tremendous leadership and accountability, oversight. You want to make sure information is consistent. You want to make sure that it's supportable. And that it's verifiable. Very, very important thoughts. We don't have time to read all of them here, but please take a gander at this if you're embarking on this journey. Last slide. I've been speaking for an hour, and this hour has gone very quickly. I can't even believe, I looked at my time. You noticed I started running a little fast on these last slides because I looked at my time and thought, oh, wow, I've gone over, which I never do. This last slide, I would describe it as a Rosetta Stone for you. This encapsulates some of the key things you need to think about. It's sort of the overlay to making sure that what the previous slide was trying to encourage, which is meaning getting it right. So, identifying relevant issues, prioritizing them, make sure you have clear board oversight, focusing on a strategy. And while you're focusing on it, make sure you're really focused on value creation, because you want benefit out of this. If you're going to do this, there's real value that can be created to doing so. Picking the right frameworks for you. Don't let some consultant tell you this is how you have to do it. Make sure you get a lot of views, because there are many ways to do this. Making sure you define and track performance, making sure the data is reliable, and making sure you make this a meaningful, recurring topic. You do not want this, again, to be drafted in a dark room, a white paper to be presented, and it to go on a shelf somewhere. This is an iterative process. The environment's evolving. There are innovations every day, new regulations, new reporting organizations, new thought leaders. Believe it or not, in each of your spaces, somewhere in your supply chain, somewhere in your value creation chain, there is innovation happening. Whether it's packaging, whether it's how things are made, it's whether how things are sourced, how things are transported. There is innovation out there for you. And you want to be iterative so you stay on top of it and you get to see it. And then you need to decide whether you want to have third-party assurance or not. Private company space, maybe, maybe not. It's something you need to think about. On that note, a huge thank you to all of you for persevering through an hour of Christopher. So
this was so awesome, Christopher. Thank you, thank you, thank you. We have some questions for you. So a couple things. First of all, I just round of applause for Christopher and the BDO team, because there was so much information here, and just a reminder that there will be a PDF of these slides sent out to all registrants. We will have the recording available on our website. And then if you want it after Monday and you don't want to go to the website or whatever, you can reach out to me directly and I'll get it to you. This is, I'm going to start because I get to.
If there's a question I'm unable to answer, it's going to require a lot of thought. We'll take them offline and provide a response to the person asking the question, or I may refer it to my ESG Center of Excellence. BDO, we've created a Center of Excellence around ESG, and I have a team that might be able to respond if I'm unable to. I doubt that will be the case, but if there is, we may do that.
Thank you very much. So this is really, first of all, I appreciate the translating back to like, how does this actually impact family business and privately held enterprise? And the sort of more global perspective. But often what happens in family businesses is we stop thinking about something because it's too big, right? And like, there was so much information that you shared here. So I want to just ask two things. One is the translation of terms. So in the ESG space and in a lot of, corporate endeavors, and I mean things that have been designed around a public company model, there are terms that are used that don't necessarily resonate with a family business. And yet there are the exact same things and concepts already happening in family businesses, maybe always, especially around the things with family values, family business values, their commitments to their communities, their commitments to their family team members, their associates, and so on. Any advice for family businesses to look at and sort of start to address and maybe aggregate the things that they're already doing, but that may have different terms that they associate with, to help them on their ESG journey, to start essentially doing an internal audit about the things that they're already doing and applying it in the ESG space? Any thoughts?
It's a really good question. So I guess I'll start with, you don't know what you don't know, right? And that's it's an axiom that is very true. So, and again, this isn't a plug for BDO. This is a plug for making sure you have the right player to help you along the way. I think that translation, that sort of helping a family business understand how these concepts really apply to their environment, really requires bringing in someone from the outside to talk to them about it. And that's not outrageously expensive. That doesn't commit you to some large sustainability journey. All it commits you is to a few sessions of talking to someone about, okay, here are the major areas of ESG. Here's my family business roadmap. Here's what we do. Here's where we operate. Here's where we source. Here's how many employees we have. Here's the types of things we do. Can you help point me in the usual suspects of where this might be impactful to me? And can you help point me in the direction of what are those things we might be doing that we might just need to tweak, emphasize, repackage that could already be beneficial? So for example, many of you, well, let's talk about the S and the social side of this, and let's focus on diversity, equity, inclusion. Many of you may have already embarked on programs to broaden the diversity in your employee groups. and in your employee leadership, right? Your leadership teams. But that may not be galvanized in a program. The statistics that you cite may be less mature than more mature in terms of what you might need to aggregate. An employee and consultant to talk to you about that and talk about the types of things you think about. You already are doing the activities. It's now trying to figure out what the source information is that supports those activities and how you aggregate it and analyze it. So, and that applies to a bunch of different things. So my view is there isn't a slide deck somewhere I can say, okay, here's the Rosetta Stone translating this from the big words and all the big activities that one might say, hey, that's a public company, that's not me, to how does this apply to me? That translation guru is the right consultant, the right party out there to help you. We have relationships. I mean, we do this journey too ourselves, so we have the ability to do it, but we have relationships with several organizations out there that also do this, that we trust, that we're very comfortable with. So if someone is looking for a referral for this, please don't hesitate to ask us, and we can help you with that. And again, that doesn't mean you're buying some $50,000, $100,000, $200,000 project. That means you may engage someone for $5,000 or $10,000 to sit in, talk about how this applies to you. That'll take the I don't know what I don't know out of the equation and allow you to start getting some meaningful correlation of these concepts to your business.
Great. I've got two more, maybe three, really quickly. And I just mindful of time. This is to go to 11:30 our time CST. So maybe take a drink of water, Christopher. Okay, so I'm going to start with this question from Corey. It says, in the context of family businesses, what are the thoughts and perspectives on net zero commitments? Specifically, how rapid is the growth of those commitments, and how many are including scope 3 emissions into their commitments? This is a long one. Further, have you worked with any family businesses entering or making purchases in the carbon offset markets?
Awesome
question.
Corey. Well, I guess if I had written a question, I wouldn't have written it any better than that one. So Corey, great question. It's not this, but I would say it's this. If you subscribe to that ESG Today and Summit, and it will disclose private businesses, some of them family, that are making disclosures. There are 20, 50, 100 companies disclosing a day their net zero commitment. And the reason that's happening is because of competitor pressures, and that there are net zero, this is a bad term, Nazis out there. There are net zero traffic cops that are out there pushing on companies to do this. So I would say that it is starting to have a huge impact on private company space for you, in order for you to be relevant and competitive, and it's accelerating at a huge clip. B, I think it is a net zero commitment. It isn't a net zero minus 20% commitment. It's a true net zero commitment. And then the strategies, it's a heavy lift, because even though the commitments that you see in the marketplace are net zero by 2050, a 50% reduction by 2030, well, that's a really, really heavy lift, especially if you have products that you use packaging for, right? You have products that use transportation. You actually ship products. Well, you've got a supply chain. You've got a dirty, heavy carbon-based supplier of service to you to get your products in the hands of your customers. You use contract manufacturers in China that are heavily dirty, coal-based energy supply. There are so many things to consider, that if you're going to do this and try to achieve a 50% reduction by 2030, you need to get started tomorrow. And then on your question about the offset strategy, we haven't been in the business yet helping clients with the carbon offset strategy. There are specialists out in the marketplace for that. But remember, ESG is not about, okay, measure and offset. ESG is about measure significantly and meaningfully reduce and publish what those activities are to reduce. And then when you get to the net, small remaining piece, offset. If you're looking to, hey, I'm going to buy my way out of this, the traffic cops, the people out there policing, the CPDs of the world, because there are thousands of companies that have made their carbon-based commitments to CPD, and then they audit you when you make that. CDP, I said the acronym wrong. They will very quickly jump on you if you're using just an offset strategy and aren't doing things meaningfully to reduce, because they want to see, we measured, here's our number. This year we reduced 10%, this year we used 20%, this year is another 10%, 20, and our goal is to get to 10% of our baseline and implement a carbon offset strategy accordingly. I am not wholly knowledgeable in full carbon offset strategies. It's a very specialized consulting area of practice. So I encourage you to seek out that. And if you do have a request for who might be a good party out there, we can get you a referral.
Great. Thank you, Christopher. I've got two quick questions. One is actually about BDO. I believe you have a sustainability report, and they want to know, I will say, Craig would like to know if it's available for your clients. And then inside that report, do you report your supplier diversity?
So, Craig, a very good question. And the answer is we do not yet have our sustainability report out. So at the beginning of the intro in my scripted remarks, I think I said BDO is deeply engaged in our internal sustainability journey, which we are. So we launched that journey formally last year. The individual that's overseeing that journey, Kara Musis, this incredible professional, has brought the full team to bear, our leadership team, our executive team, and we are deeply in that strategy. We expect to issue our first sustainability report in Q1 of 2023. So stay tuned. It will be publicly available then. She's shooting for January. I say Q1 of 2023 because January is a heavy lift. And part of that journey, the second part of your question, is focusing on our suppliers. So we will be setting the strategy. Right now, we're in our materiality assessment. We've dug deep into supply chain, and we will be setting our own criteria for making sure our suppliers are sustainably focused. And when setting that criteria, obviously, there is focus on diversity, equity, and inclusion, pay equity, all the things that one might think beyond just climate.
Thank you. So I have another, this is like it's maybe rhetorical and something to think about. Massive lift, or you keep talking about the heavy lift, the mass lift, all that, right? But it's also an expensive lift. So could you please speak to the cost of embarking on an ESG journey and thinking about that realistically as an expense, and also the cost of not being thoughtful and planful and meaningful and embarking on an ESG journey for a business?
All right, so let's talk the latter first. So whoever asked that question, when you lose your first customer, and if you don't embark, you will. When you lose your first customer and they actually say, I'm sorry, but you haven't embarked upon a sustainability journey. We don't know where you are with respect to diversity, equity, inclusion. You say, but I've got some neat words on my website. And they say, I don't see your sustainability report. I don't see your carbon footprint. I don't see your meaningful assessment. I'm sorry, our strategy doesn't allow us to do business with you. It will be too late. It will still take you 24 months to get there. So how do you measure that cost? The loss of one meaningful customer. One meaningful customer will clearly offset the cost of embarking on this journey. And so, people say, well, show me the tangible benefit. Show me the actual dollars I will make as a result of this. Well, you have to correlate them. The loss of customers, the loss of employees. I will tell you, sustainability focus and corporate purpose is now being evaluated as one of the key drivers to employee retention. And if you're not true to corporate purpose, and your corporate purpose doesn't weave in sustainability, you will lose employees. Every loss of a skilled employee, what does that cost you? Between recruiting and education, training and lost know-how, $20,000, $30,000, $50,000 per employee.
Yeah.
Lost customers, lost employees, attacks on your brand in the marketplace. Now let's talk about benefits. Why? Well, value creation is beyond just your employees. It's attracting new customers. It's competing with other businesses, showing that you're doing meaningful things that will give you one additional notch in your quiver or your arrow or your bow to take a shot and land a new customer. It will support your brand in the marketplace. And it helps you focus on risk factors because, believe it or not, from a risk management perspective, supply chain risk, sourcing products, where they're coming from, who produces for you. You've seen in the news some major producers of garments right now are getting shot by stakeholders because they're sourcing from regions around the world where their raw materials or the manufactured soles of their shoes are being done by labor that's under forced labor or modern slave labor issues. I will tell you, I think those costs that you're avoiding, the risk management, far outweigh the cost of developing and implementing a ESG strategy. I hope I was persuasive.
No, that's fine. That's what I was looking for. And I made that question up. So.
Oh, okay.
You up, Christopher. Okay. So then one final question here is, oh, wait, this is for me. I'll take this other one first. Frank Bramson, thank you for ringing in. When I have seen this, his company submitted an unpublished ESG audit last year, which was a real eye-opener and very useful way to get an initial orientation to ESG reporting. So I would call that a beta or a test run. And Frank is one of our members, and for the members on the call, if you'd like me to make a connection to you, I think Frank would probably be really happy to talk to you about his ESG journey for the company. I'm offering you up, Frank. I hope it's okay, but you have to go through me to get to Frank. So just so you know.
So, and what Frank's talked about, this is dry runs are good. So Frank, my hat's off to you. That's a really, really good thing because there were probably things in there you maybe didn't like, right? So you might, if you get to this early enough, you might do a dry run and all the way up to drafting a report and decide not to issue it to internal and external stakeholders because you want to work more meaningfully on your targets and you want to accomplish things. You may not have the controls and processes in place enough to manage the acquisition of data. There are a lot of reasons why, but allowing yourself the opportunity to do that is hugely beneficial to an organization.
Absolutely. Okay, I'll answer the question to me, which is leaders almost always in family business, almost always are fatally short on bandwidth. How do we help them dedicate what limited bandwidth and resources to begin the ESG journey? Is this a carrot, a stick, data, stories, making a business case for the specific business? So, I mean, I'm just going to answer for myself. And I always go back to the push to the board. This should be something that the board should be supporting the leadership team on in terms of it's a priority and why, and making the case and gathering data and maybe even providing education like this. I also know from my own experience with family businesses, there are some leaders who, you can stop selling because they're not buying. And so they're going to have to, appreciate the consequences, enjoy the consequences, as we say, for not taking action on this. And, that sounds, I'm being a little bit flip, but I do think that for the people that are going to try it. They're going to go for it, and there'll be a reward. They will see the positive consequences of the change. The focus on it is something that the good leader is going to need to take on themselves and then make a priority to run down the rest of the business. That's my answer to that question.
Can I give you my answer also,
Yes,
which is
please.
aligned with your answer?
Mhm.
If resources are tight and the C-suite is not embracing, then whoever may have asked that question, you haven't done your job to actually present the business case and what the potential impact on the organization is. Not doing this, not hiring a CSO officer, someone who's going to be solely dedicated, or taking one of your really strong management team and making this 80 or 70% of the responsibility. But hiring an external CSO in might be more beneficial because you'll get someone with a lot of knowledge. If you dedicate someone internally, they're going to have to get up to speed. So there's you lose 12 months by dedicating someone internally. If you can't get the buy-off on that, then it may be that it's just how you've presented, influenced the leaders in your organization to understand the business imperative. That would be my answer, because the imperative is so great that my view is anyone in an organization which really embrace the imperative would then allocate the resources to focus on it.
And also, I'll just say, not every organization is a $200, $500 billion company. So for the 30 million, the 15 million, the 10 million, you can just get started. I mean,
Right.
Get started. That's all. Okay, I think that's the end of our questions. Unless, Dale, did you get others that I did not see?
No, not at all. You covered it.
Okay, well, I can't thank you enough, Christopher and Dale and your team, for putting this together for us. I hope everyone on the call got something from it and can appreciate and able to take some action steps away for themselves, or are inspired around some action steps. As I said before, we're going to send PDF of the slides out. The recording will be available. And again, reach out to me if there's any specific questions that you might have. Dale, I know, is also available as a resource. Happy to put the information. His contact information will actually be in the PDF, so you can get that as well. It has been a real pleasure to spend this time with you.